Time for the market report. Prices still going up with a few exceptions.
A big one in particular we'll focus on today, along with some USDA reports. But first, the numbers. What were the week's biggest gains and losses? And then the current state of our cattle and broilers, according to the USDA. And finally, corn on a downswing. Several market analysts explain why. So, markets closed still trending up. Both row crops and livestock split. Let's take a look. The week's biggest gain, lumber, up 44.5 bucks, nearly an 8% increase from the previous week. The week's biggest loss, corn, down 21 cents. That's more than a 4.5% decrease from the previous week. Several USDA reports released recently detailing our current livestock numbers, along with potential production and export numbers for the coming year. It looks like things are mostly positive on those fronts. Here's what they said.
In the Livestock, Dairy, and Poultry Outlook report this month, it looks like beef and cattle production is up based on December slaughter data. 2025 annual total 26 billion pounds, while this year's production forecast 25.7 billion pounds, slightly lower. 2026 cattle prices are expected to rise 5% from last year. Dairy exports look encouraging, as it seems this year will reach a new record high due to competitive cheese and butter prices. Production forecast is also encouraging, with this year looking like about 234 billion pounds. However, prices for cheese and butter are lowered due to less domestic demand, while international demand is strong. 2026 all milk price forecast $18.25 per hundredweight. In the broiler hatchery report, broiler-type eggs set in incubators up 1% compared to a year ago, while broiler-type chicks placed up 3% compared to last year. In detail, in all broiler-producing states, Mississippi included, December 6, 2025 egg placement about 249 million, December 27th, 252 million, and January this year about 251 million. December 6th, 2025 chick placement about 196 million, December 27th about 194 million, and January 10th this year about 198 million.
So, corn had a big fall in price, and as we said last week, the USDA's annual row crop report had something to do with it. Analysts Naomi Blohm and Ted Seifried say it has to do with the projected corn numbers from the June report differing dramatically from the actual numbers at the end of the season. How did this happen? Well, that we don't know, but we can definitely see the result.
It was a triple whammy of a bearish report that the industry wasn't prepared for. The biggest shock, of course, being the increased acres, harvested acres in corn, bigger yield on corn, bigger ending stocks on corn, both in the United States and around the world. And so it was just such a negative demise of information. Prices plunged 25 cents lower and just created such a negativity around the agricultural space. The report definitely bearish in all facets.
When you have a corn yield that falls outside the range of guesses, that means everybody was surprised. There was nobody guessing that we would see a raise in corn yield. The highest range of guesses was keeping it the same. So yeah, that has to be a surprise. Acreage has continued to be a surprise as it has continued to move higher. And so production coming in over 450 million bushels higher than expectations. Obviously that's a surprise as well. Yeah, you had a whole lot of surprises. We're going to spend years trying to figure out what happened to acreage this year, right? Because overall, we had harvested acreage up 4.5 million acres from the June survey. The June survey has never been off of final acres by more than 1% before. It's never even been 1% before. This is almost 4%. It is unprecedented. So how did we get all this so wrong? How was that survey so off? And how do we keep getting more acres? Now, the one clarity that I guess we got from StatChat with Lance after the report was that the harvested acreage number percentage, or the percentage of harvested acreage versus planted acreage, increased because there's really only so much need for silage, right? And so when you have such a large acreage number and such a large crop and such a good crop, you don't chop as much of it for silage, or as high of a percentage. That was the the rationale that I understood for harvested acreage going higher.
Building on what Ted said, it was a combination of farmer survey, that's what the USDA had said that they got all the information from, along with the risk management agency data updated. So building on the silage talk, the North Dakota State University professor explained it, I think, the best. He said that with the yields being so good in the Dakotas, Minnesota, Wisconsin, once those bunkers are filled for silage, and it was record yield for silage, then the bunkers are full. So what's remaining in the fields then becomes harvested corn acres. And I guess that made a lot of sense to me. But that was such a large amount of an increase of harvested acres, up over 1 million than what it had been just from the month prior, that's just what let it be such a negative surprise to the marketplace.
And that's it for a deeper look into the markets. Looks like prices will stay volatile.